Arian Eghbali here from Arian Financial. Hope you guys are doing great. I want to talk to you guys about business credit. Business credit is important for all the businessmen and women in America to have a strong business credit. Same way that your personal credit is important, your business credit is more important than your personal. And I want to tell you in this video why your business credit is important. Imagine when you are on your personal credit, you are one person by yourself, because it's you and your social and your date of birth. But when you establish a business credit, it's you and your employees, your CEO, your CFO, and many other employees that you have. That by itself makes your company a lot stronger, but if you do it properly and if you build it properly. Building properly means making yourself member with Dun & Brad, Arian, or other bureaus that they report on a business scale and business credit. So you might ask yourself, what's the benefit of having a business credit report? My personal credit is good enough. Why do I get a business credit? Or why do I even establish a business credit? Or why do I bother to establish a business credit? Well, to start, since your business credit can be stronger than your personal credit, you can have a higher credit card limits. You can have many more credit cards. For example, as you know, most credit card companies, they go with your income, how much you make a year. What's your gross income? What's your net income? How much is your expense? So you are one person by yourself and you have to feed a family plus have enough so you can pay back your credit cards. But your business is a little bit different. It's you, as I mentioned, plus many other employees that you have. So these can come to play and your net income and gross would go higher. Example, your personal credit goes based on your personal income, as I mentioned. Your personal credit, your personal income is about, let's say, $200,000 or $300,000 as a good executive. But your company, let's say, makes $500,000, $500,000. So automatically your gross is higher, your income is higher because you have a company. And your credit card that you can get is definitely going to be a higher limit. For example, Capital One. As you know, Capital One has a credit card, personal and business. They give you credit cards on personal level and they give you a credit card based on your business. Capital One Spark, Capital One Power, and many other. But based on experience and history, I've seen the limits of these credit cards. The limit of your business credit cards will be higher because your income is higher, your gross is higher. We're dealing with the company, but again, you gotta build it. You gotta show that you're a company. You are one plus many others. But your personal, you cannot because it's your personal. It's one person only. So that's the advantage of building your business credit report. That's one of the advantages. Why? You get a higher credit card limits. That's one. Number two, you get credit cards that are assigned for businesses like yours with 0% APR. You're not paying any interest. Why? Because it's a business. It's either a startup or they need to get your business. So they will give you a credit card. There are many credit cards out there with the 0% APR for businesses. So you get an advantage and you take advantage of these credit cards with the 0 APR. So, number one, higher credit limits. Number two, some cards give you 0% APR, no interest for your business. Number three, it's the most important. If you talk to your CPA, they will love you for it. Why? Because you are differentiating your personal expenses versus your business expenses. So when you have a business credit card like American Express Platinum Business or Gold Platinum, you are putting your business expenses on this American Express. And when it comes at the end, you are putting your charges on this American Express. When it comes to the end, it would be a lot easier to differentiate and your CPA would love it and your CPA can use these business tax write-offs and business expenses. So number three, your business expenses would be different or differentiate from your personal, which is perfect. So you got it? Number four. So as I mentioned, on your personal credit report, you're one person. Your business credit report, you're one plus many. And you gotta build it. You gotta build it with the bureaus that they do business credits, which is good. Dun & Brad, Arian, Equifax, and many other. and you get credit cards with higher limits, chances are having more 0% APR, so you're not paying interest because you're either a startup or you're established and the banks want your business. Bank wants your business. You get that? But you gotta build it. You gotta show to the bank that you are a successful business and you gotta build it. Because bankers or brokers, they're here to break you. That's what the name is. So you gotta be smart. And if you own a business, you gotta build it and you gotta differentiate your personal versus business. Your CPA would love it. Your taxes are different now. Your expenses are different. Expenses, remember this. Number 4, when it gets to personal credit, you gotta do personal guarantee. So, when you wanna sell your business or transfer your business, this doesn't mean anything. Why? Because Arian Eghbali, I have a credit card, 200,000, 300,000. But if I wanna sell Enrich Financial to somebody else, this is not my asset because it's me. It's personal guaranteed and it's mine. It doesn't belong to a company. So if you want to do it smart, you do it with the company, you build your company, you get credit cards under the company, your company value goes up because if you want to sell it, most banks allow that you transfer your credit card to a new owner. Got it? Simple as that. So you're personally not attaching yourself to this. That imagine this. I'll make a very easy example. Consider your business like your baby. It's new, it's nice, it's the beginning, it's newborn. If you feed it, if you feed them physically, financially, they grow. And your business grow, like your baby grow. And it gets to the point that your baby is stronger than you. You get that? Your baby is stronger than you. Your boy is stronger than you. Your daughter is stronger than you. So this is the same thing with the business. You can build your business so strong that your business is stronger than yourself. Because their income is definitely higher. One day you're sick, your business doesn't get shut down because you're one out of a many. So you can sleep. Tomorrow if I want to take a vacation, I can take a vacation, but my business is still go on because I have staff that they run it. So the company will go forward. But I'm in Hawaii, or I'm in somewhere else, or I'm sleeping, or today I want a day off, but my company will move forward because I have staff. You get that? So it's a benefit. When I get a credit card, banks would love it. They're like, you know what? If Arian cannot keep up, the company is going forward. If Arian income is not enough, but the company income is more, the company is an asset for the bank. And of course, it's having a credit card is an asset for you as a business owner because it's your company. You have a credit card. And there are a lot of advantages that the banks and the credit card company gives you. And it keeps going on and on and on and on. So higher limit, chances of having a 0 APR, higher 0 APR, more credit cards with a 0 APR, differentiating your personal and businesses, that's another thing, you know. Another thing that I want to talk to you about is having a business credit card. The benefit of it is most companies, most credit card companies, they don't report it to your personal credit report. Example, you get an American Express, and I hope by the time you're watching this video, they haven't changed their policy. You get an American Express, for example, American Express Platinum or Gold, and they're your business. This credit card will not show up on your personal credit report. So you might ask, what's the benefit? So what? It's not reporting on my personal credit. The advantages of it is maybe you maxed out on your personal on this credit card. For example, it's $30,000, $40,000, $50,000, and you spent $40,000, $50,000, $60,000 on it. This balance is not reflecting on your personal credit report. So when you want to lease a car, when you want to get a mortgage, when you want to get anything else, this balance is not showing on your personal credit report. It helps you because it's not your liability. When your liability is less, your income would support the car. Your income would support the mortgage that you want to get personal. Make sense? So let me wrap it up. The benefit of having a good business credit and having many business credit cards or business loan and they're the strong business credit is, number one, you would get a higher limit credit cards. Instead of getting a $5,000, $10,000, you get $40,000, $50,000, $60,000 credit cards because they're dealing with your company. Number two, Your personal and business would be separate. Your CPA would love it for tax purposes and your expenses. Number 3, chance of having a better 0% APR on a business credit card, a lot more than a personal. Most banks would give you a 0% APR on your business credit cards. That's number 3. Number 4, it would be an asset for your company than having a credit card and loan, because you can transfer it. Most of the times you can transfer it to a new owner. That's number 4. Number 5, it will not show up on your personal credit. So your personal credit wouldn't show this liability. So it would be easier for you to get a mortgage, to get a car lease, to get anything else, because this debt that you have, $500,000, $400,000, $600,000, whatever it is, it's not showing on your personal credit report. You got it? Got it? Easy breezy. Till next time, this is Arian Eghbali. See you next time.